All right, what's up, guys? Here we go. This is the Accounting Day 1 worksheet. This is just here to check our answers. So we'll get most of these answers from our notes packet, and we have the accounting equation in our notes packet. That is very simply assets minus liabilities, if I could type here, equals owner's equity. Okay, so make sure you guys have that. It should be on your sheet as well. And again, if you want to pause the video, then work on section 2, I would highly encourage that. Some of this stuff you are going to have to try out first and then come back and check your work. If you're just watching the video and getting your answers and copying down, you're not actually going to learn it. So I would take the time to go through and try it out. You're going to have to fail at it in order to learn it. That's just the way it is. Sometimes it's that way in math or physics or whatever. So let's just make sure that you are able to learn the accounting. So use it as a tool, not to just get an assignment done. All right. So we can choose assets, liabilities, or owner's equity. Remember, assets are anything the business owns and holds value. Liabilities are debts, and owner's equity is the owner's claim to the asset. So basically the asset's value minus any debt. All right, so we're going to start with these easy ones. So computer equipment would definitely be something that the company could own and holds value. So that is definitely an asset. Cash in the bank, cash is always an asset, right? We would definitely add that into our equity position if we were playing Sigopoly. Absolutely. Office equipment, again, would be another asset. I'm not even going to type it here because I'm going to have to go back and adjust my sheet. So office equipment is definitely an asset. Repair tools, right? If we owned a auto body shop or a mechanic shop, something like that, if we were an electrician, all of our tools and repair tools would be assets. We would own them and they would hold value for us. So repair tools, if we needed to liquidate those and turn them into cash at some point, that would absolutely be an asset. Okay. There's also another one on here. It's a little tough, but I think you guys can pull this thing off. It is accounts receivable. So accounts receivable is money that is owed to us. We will receive that money at a later date. It is a credit transaction, but it's somebody else's credit transaction that is owed to us. So since they owe us the money for the product or service that we have already provided, then that is an asset for us. Accounts payable is something that we need to pay. We have received a service or a product already, and we still owe money for it. So maybe we swiped our credit card, maybe we borrowed money to buy a building, maybe we borrowed $8,000 to buy repair tools. That would be a liability. So accounts payable is our liability right there. And then our loan, owner's equity, is going to be the business owner. The owner's equity is Mr. Talicki in this situation, and it's referred to as capital. Okay, so his accounts receivable is an asset, computer equipment asset, accounts payable is a liability, cash is an asset, office equipment an asset, Mr. Talicki, business owner, capital, that is going to be owner's equity, and repair tools is going to be an asset as well. I'm going to clean this up so I don't have to go back and fix this later. Go ahead and delete this. Make the sheet nice and clean. Okay, here we go. All right, so pause the video, go through number 3. Number 3 is going to be, and I'm not going to type these out, this is right on the back of your note sheet. This is the last thing that we did. That is, what did the business gain? If we gain something, that increases an asset. The second one is, what did a business lose? That is going to decrease an asset. Number 3, did we take on any debt? That increases liabilities. And number 4, if we paid down a debt, that would reduce our debt, so decrease liabilities. So make sure we understand those 4 questions. That is what we're going to ask when we go and do the accounting for these business transactions in section 4. So again, go ahead and pause the video, try out, or actually, you know what? Listen to number 1. Let's do number 1 together, and then you can start working ahead and then come back and change your answer. So, okay, this is the asset columns. We're going to put a plus, minus, 0, or some sort of combination, maybe a plus, minus in each box. If assets increase, we put a plus. They decrease, we put a minus. Liabilities increase, we take on debt. We pay down debt, plus, minus. Owner's equity, we can solve for right here. Okay, so we're the business. We bought office furniture on account. What did we gain? We gained office furniture. Office furniture is an asset, so that is a plus. What did we lose? Uh-oh. You know what? It's not letting me put a plus there, so I'm going to have to type the word plus. That is great. What did we lose? We didn't lose anything. We bought it on account, so we haven't paid cash for it. It's actually a debt for us. So when we buy something on account, it's like we went to Nebraska Furniture Mart, bought a $500 chair. It's a really nice chair. And we swiped our credit card, okay? So that's going to increase our assets. So what did we lose? Nothing. Did we take on any debt? Yeah, we took on debt, which is a liability, okay? So if that's $500, $500 minus $500 equals 0, all right? We don't have any numbers for this, so I'm not expecting you guys to do any math for today, but we're just trying to understand our 3 categories here. All right, so pause the video, see if we can figure out what number 2 is, and then I'll move on to number 2. Sorry, I have some allergies going today. All right, here we go. Number 2, the owner invested cash into the business. Remember, we are the business. What did we receive? We received cash. What is cash? Cash is an asset. So we increase assets. What did we lose? We didn't lose anything. We lost nothing at all. Did we take on any debt? No, we didn't borrow any debt. Somebody invested into our business. Did we pay down any debt? Nope, we didn't pay down any debt. Great. So let's say the owner put $10,000 in. 10,000 minus 0 equals 10,000. So that's going to increase owner's equity. Realizing that the owner is the person who put the money into the business, they can take the money out of the business. So they have the right to the owner's equity at any time. All right, pause it, go for number 3. Number 3, paid the monthly utility bill by check. This is critical. You will see tons of expenses. Expenses are for something that was provided for you and that we have already used. So utilities, the way it works, we turn on the utilities, we use electricity, okay? And then we get a bill for how much electricity we used at the end of the month. So we have no asset. This is not tied to an asset. This is an expense. This is a cost of operating our business. So we don't gain the asset of electricity in this instance. We did pay the monthly utility bill by check. Check is cash, so that is what we lost. So what did we gain? Nothing. What did we lose? We lost cash. So that would be minus for cash, minus for assets. Did we take on any debt? No, we didn't borrow any money. Did we pay down any debt? No, we didn't pay down any debt. This is just an expense. Expenses are always minus 0 minus, okay? And you'll notice I put a little utility expense over here. Expenses are always minus 0 minus. All right, on to number 4. Number 4 is a little tricky. We purchased office supplies with cash. What did we gain? We gained office supplies. Office supplies is an asset, so we're plus. What did we lose? We lost cash. What is cash? Cash is an asset. Boom. Plus, minus, 0, 0. Boom. That's it. We traded one asset for another. We used our asset cash to purchase another asset. That's all we did was just trade assets. That's a tricky one. I did tell you earlier that you could put plus minus in the same box, but I only said it once. So a little tricky on Mr. Concilio's part. All right, on to number 5. We purchased inventory on account. Anytime we hear on account, that is a credit transaction. So what did we gain? We gained inventory, which is an asset, so we increase assets. What did we lose? We didn't lose anything because we haven't paid cash for it. Did we take on any debt? Yes, we paid for it on account, so that increases our liabilities, and 0 for owner's equity. We did not pay down any debt. We took on debt. Very good. On to number 6. Number 6 is the exact opposite as number 2, so that should be very, very easy. If we understand number 2, this is going to be minus 0 minus. Number 2 was owner invested cash into the business plus 0 plus. Again, we're the business. Withdrew cash, minus 0 minus. The business lost cash there. On to number 7. Bought a computer with cash. This is the exact same thing as number 4, just instead of office supplies, this is a computer. So we are plus, minus, trading assets again. 0, 0, boom. On to number 8, and number 8 is an expense. You should know number 8 as an expense. Actually, 8 and 9 are both expenses. They're done the exact same way. So go back, look at number 3, see what you did. I'm just going to copy these over. Boom, boom, 8 and 9, super easy. All right. Uh-oh. What did I do? I did something. I messed it up. Okay. It doesn't like it when I do that, so I'm going to have to type it up. Minus 0 minus. All right, on to number 3. We wrote a check to a creditor for an amount owed on account. What did we gain? Nothing. So we're basically writing a check to a creditor, let's say for office furniture, right? We bought office furniture on account. Now we're actually paying some of that debt off. So what did we gain? Nothing. What did we lose? We wrote a check, so we lost cash. Cash is an asset. Did we take on any debt? Did we increase our debt? No. Did we pay down any debt? Yeah, we did. We paid down some of our debt, maybe from number 1, maybe from number 5, but we're paying down some of our debt, so that decreases and nothing changes for owner's equity. So we lost an asset, but we lost some of our debt as well. Okay, that was the first day of accounting. Hopefully it started making a little bit of sense. So there's some tricky ones in here too. Some of you, it will help when we actually put some numbers to go along with it. But I just wanted to get you guys going, get you guys thinking about it. Using this vocabulary is huge. If these did not make sense to you, go through, read them again. Make sure we're asking and answering our 4 questions right here. This will help answer the business transactions, because this is the actual accounting. All this other stuff is like what we need to know before we are able to do this, but this is what we are trying to do right here. It's called double entry accounting, and that's what we're working on. All right, check your answers, turn in your sheet. Have a great day. We'll see you guys.